Hi everybody, Frosty here, back from a long extended holiday weekend. Man, I had a good time this weekend. Today I have a quick look at where the market's sitting right now. I have the results from the weekly algorithm program run, and I have some thoughts on the homework I did over the long weekend. So with that, the market yesterday closed mixed. The Dow was down 130 points, but the NASDAQ and S&P 500 were both up. The NASDAQ was up a lot, up 196 points, 194 points. That's a lot of money flown into the techs yesterday. That's a lot of money flown into the techs. But the Frosty Portfolio is still down 4% since I started that. But more on that after I run through the algorithm results here, okay? There was only one new signal given yesterday. The Consumer Discretionaries, the XLYs, flipped back to the downside again. I don't think there's a whole lot to worry about there though, because this is like the third or fourth week in a row that the XLYs have flipped back and forth. So that's just to keep an eye on it and see what happens next. I'm not going to do anything about it. I do not own it right now, so nothing to worry about. Most of the portfolio is on Met target signals. So, I mean, they're all just sitting there waiting for further action, except the XLYs, the discretionaries, did meet the up target yesterday and then flipped down. And the XLEs, the energy sector, met the down target yesterday. So those are on the target watch list again, waiting for something to happen before we do anything in those positions. The materials, XLBs, the industrials, the XLIs, the mining and metals, XMEs, the real estate, XLREs, and gold, GLD, and the high dividend sectors are all on unmet ups. We're waiting for them to hit the target to take profits there. There's just nothing to get excited about. I mean, everything's just kind of sitting there waiting to hit targets. Which brings me to my weekend homework. Okay, I did a lot of reading. I visited all the websites I subscribed to, and I watched a lot of video this weekend. Since I told you last Friday that I was going to figure out whether the portfolio was on track or whether we need to make some changes. And I came to the conclusion that this is not a normal stock market going on right now. Okay, commodity prices, especially oil, have come way down. Okay, but inflation continues to roar. I think we're going to see the second quarter of negative growth this quarter, which is the technical definition for a recession. 2 quarters in a row of negative GDP. So are we in a recession? Well, the talking heads can't decide yet, but I think they need to stop wasting their time and say we're already in recession. Okay? It sure doesn't look like a recession though, because consumers are content, and this is why they're confused. Consumers keep spending money like it's going out of style, and it's not hard to find a job right now. There's jobs available. Might not be the right job for you, but there are jobs available. The job market is strong. All boils down to how much money the government pumped into stimulus over the last couple of years. And now the Fed is trying to slow down the market. They're putting on the brakes when the market's already slowing down. Not normal. Haven't seen this for like ever. It's going to be crazy for a while. My personal opinion here is that the market's reacting more to the politics than to actual market forces. All right? I think the only way to profit from that is to be in the right stocks or the right sectors at any given time. And the Wall Street folks hate this because they can't plan. They can't make a logical prediction up or down. But the politicians, they love it. I mean, Democrats are looking for any diversion they can possibly find to survive in November. And the Republicans, they're just going to keep piling on bad news between now and November. So I'm going to stay conservative with my portfolio. I'm going to stay in the sectors for the time being. And I'm going to just try and be in the right sector at the right time. I'm not going to take any new positions right now. I might nibble around. I have some positions that are way down. And I might nibble around trying to do some dollar cost averaging there, adding a little bit more so I don't have to get so far back. Look, that brings me to a question. Do all my followers here, do you understand what dollar cost averaging is? Or should I do a post on DCA. And give me a comment. Let me know. With that, in my life, there's no bad days. There's good days and great days. Let's go out and make it a great day. Thanks for sticking with me and watching. Frosty out.